Hey, sorry I've been slightly delayed. Hey, I was up early. It's not like I'm just rolling out of bed. Just life, man. Trading's easy, life's difficult. I'll just be a few minutes. Just getting coffee at this point. Yeah! All right, who's alive? Again, I apologize for that. Komatalibu, how are you? Jumbo, ni hao ma. Ohio. How's the sound? Good morning, moderator. We here? Hello? I guess I have to do the wonderful can you hear me type thing. Can you hear me? Never know where it's streaming to. Hello? All right, I guess Simon's there. Hello? No one even responds to the text. Okay, good. Gee whiz. All right, so good morning. Yeah. All right. Yeah. All right. Let me remind you. Well, let's start with the welcome. Hey, welcome to Trade Non-Farm Payrolls Live 193. 193, I guess. 193 months in a row that I've done this webinar live with FX Street. So welcome to FX Street. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange trading firm that would love the opportunity to earn your loyalty and respect. Please give them that chance by opening up a demo account, TradersWay.com. FX Street is where I started as a foreign exchange trader. I realized very quickly I needed some resources. I needed some help. I was a little bit lonely. And I'm like, I wonder if they have anything on the internet. Found FX Street. And it was a tiny young company, but clearly was on the right track. And very quickly, after contacting them, they earned my loyalty and respect. Yeah. And so imagine this, my first event at FX Street, 20 years ago, live streams, well, YouTube hadn't been invented yet and wouldn't be invented for many years. And so we did sort of like a chat. It was like a chat, live chats. And then I said, you know what? So I'm talking with the leadership at FX Street, and I said, let's do something amazing. Let's do something exciting. Let's do something that really isn't done before. And they agreed, and they said, well, if we're going to do something special, let's really make sure it has a real huge impact on people. And I said, well, let's trade live. Let's set up trade plans live. Let's do the analysis live as the market's moving. And if we're going to have the biggest impact possible, let's trade during non-farm payrolls because it's the biggest, the baddest event. And back then, there was a lot of scumbags and scam artists selling get-rich-quick schemes. In particular, they do it around non-farm payrolls where they said, you can make $1,000 in 3 minutes. It's easy. And I said, I just hate that. I said, why don't we do non-farm payrolls? And there's two benefits. First of all, I can teach you how to stay calm and focused on your trade plans during this crazy volatile moment. But also, if you're hanging out with me, you're not hanging out with some scumbag scam artist that's trying to sell you some get-rich-quick scheme. And I'm like, that sounds good. And they're like, yeah, that sounds good. And non-farm payrolls was born. If you're trying to calculate that, that's 16 years ago. Every month for 16 years, I've been doing this webinar. And that's probably longer than your YouTube guru that you follow that has even been alive. So anyways, thank you, FX Street, for being such a valuable resource to the FX community. We appreciate you. I appreciate you. So welcome. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. So everything is fair game. When I first started trading Forex, there were no books. Amazon.com was a tiny little startup that no one ever heard of. Barnes and Nobles, right? Barnes and Noble. They didn't have any books on Forex. But I was smart enough to figure a lot of things out on my own. Smart enough, focused enough, driven enough. I was smart enough, but certainly not the most efficient and effective way of trying to figure this out. So later on down the road, once I decided to become a professional, one of the things I did is I got licensed and registered, and to do so, I had to pass the Series 3, which got me to focus on fundamentals. And so I had to study things like the oil market, the grain market, the stock market, option market. And those questions were very much fundamental. And they'd say a question on the exam would be that you might be a grain elevator operator and you're buying wheat right now from farmers at whatever price, and you're worried that prices are going to fall over the next 3 months, and so you use some sort of option strategy or a future strategy, and you do your calculations to figure out exactly, what you would do. But very, very fundamental. So I became educated in this thing we call Forex. So I went from smart to educated. Now I kind of was not just trying to figure out what was happening, but now I was figuring out why were things happening. That was a whole different level. Skip ahead another 5 or 10 years, I decide I'd like to continue my education, and I had an opportunity to go to Harvard to get a degree in macroeconomics, and then I followed that up with a second degree in financial management. And the interesting thing is, you might say, well, so I learned a lot at Harvard, and the interesting thing is I didn't learn that much, honestly. I already, not that they didn't teach me, but I already knew through, at that time, 15 years of experience. I knew how to calculate GDP. Right. I knew all the different pieces of news. I mean, there were other, esoteric kind of things that were taught, and that's cool. But really, 90% of it was already figured out. But sort of this idea of what did I learn then? It was that last step. So I went from smart to educated, and then Harvard actually, since I already knew sort of the basics, they really helped me engage with the information, right? So, smart, educated, intellectual is kind of the thought process of being there and having done that. And so it's been a very interesting 20 years as a currency trader. So, and back before that, I was a high-tech entrepreneur and investor in the Silicon Valley. So I'm familiar with investing. By the way, I bought Apple at $6. Yeah. And you're like, oh, yeah, well, Wayne, what'd you do? Sell it for $8? I held it for something like 25 years. Maybe longer. No, probably 25 years. So anyways, what I'm getting at is you have an opportunity here in the next few hours, next couple hours, to ask questions. And I will do my best to share from that experience I've been on. And now you kind of know where I'm coming from. Just if you don't know me, I'm a businessman. So I look at Forex as a business. I've never looked at getting rich quick with Forex because I was already, not needing to get rich when I started as a Forex trader. I was a venture capitalist. My firm had about 300 employees. We had 2 entire floors of a skyscraper right next to the San Francisco Fed near the waterfront. I wasn't looking for a way out of misery. I was in my dream job. But eventually I had to give up my dream job to become a Forex trader because it was better. So I never looked at Forex as a way to get rich quick or to get out of my neighborhood and get into a different neighborhood or whatever the case may be. It was simply another business opportunity that was potentially worthy of investing into. The question was, would I give up my dream job as a venture capitalist to become a full-time Forex trader? So I'm like, well, let's break it down. And usually it came down, it came down to money, right? And money and risk. So if I had a bad day at work as a VC, I'd still have a job, I'd still get paid, I'd still have health benefits, and I'd still earn, 2 weeks vacation or whatever the case may be. You have a bad day in Forex, you waste 15 hours of your life and you lost money. And you have no health insurance. And you have no vacation. Now, the upside is when you go on vacation, you can trade and make money, which is the best pips ever. But you see what I'm coming from, where I had to like cash flow this thing out and do a best case, worst case, base case scenario, and then compare Forex as an opportunity, Forex as a business versus my current business. And of course, they couldn't be even Steven, because if Forex is risky and I could work all day and lose money versus at my company, I could work all day and make money, or not work all day and make money, then Forex had to be significantly better to compensate for the risk. It's like a bond. Okay? 2 bonds with a face value of $1,000. Which one do you invest in? Well, one of them might have a higher yield. Why does it have a higher yield? Probably more risk associated with it. Well, what kind of risk is it? And are you compensated enough for that additional risk? I don't know. And that's what requires analysis. Why does a bond out of Argentina pay 20%? Might be a risky investment. Well, why don't you buy an Argentine bond paying 20%? Could you imagine being guaranteed to earn 20% a year? Why wouldn't you just put all your money immediately into an Argentine bond? And then you might say, well, default risk. Well, they're already paying you 20%. So they're already covered you for that default risk. So what's the real risk? The value of the currency is dropping by 30%. So even though they're giving you 20% return on investment, that's in Argentine peso, that's falling faster than you're getting paid. So once again, that's why you're probably not buying it. You guys seem quiet today. Are you okay? You guys are quiet. Maybe the FXStreet community is quieter than I'm used to. Is that what's going on? What's going on? You doing okay? Is there like a massive lag or something? Yeah. Yeah, everybody needs coffee. Yeah, a long week for sure. Yeah, no lag. All right, cool. Okie dokie then. All right. So anyways, ask questions, get involved, and I'll do my best to help. Everyone is concentrating? What do you need to concentrate on? We have 35 minutes to go. Is that right, Lucas? You know what would make you feel better? Get in the tractor! Feel sick today? Get in the tractor! Feel tired today? Oh, that's terrible. Get in the tractor! Oh, just don't feel motivated. I haven't found my true, authentic self. Oh, get in the tractor! Yep. The weeds don't care. All right. So anyways, anywho, what do we got going on? Yen gave back. Oh, rained. Yeah, we're going to get rain today too. Looks like it's gray outside today. The lake looks like slate. Okay. Simon says maybe have some lines. All right. All right. So anyways, yen is somewhat weak. Interesting. We'll have to look at JGB yields. Dollar's weak and recovering. Okay. Swissy, strong, weak. Okay. Aussie, weak. Euro strong. Pound weak. Kiwi still somewhat weak. Trend is just moving, huh? By the way, this was off of an old discussion here. This idea of trading an indice or index. Look how it dropped. One standard deviation from the mean. Returned to the mean, but also the role reversal. Isn't that nice? Lovely till your mum. Ah! No! Jim, how do I undo it? How do I undo? No. No, I forget these things. How do I undo? Can I just refresh? No. Undo. Control U. No. How do I do it? I killed it. All right. Well, I'll figure it out some other day. Well, I hope the weather improves here. I have a premium cigar. It took them probably 3 years to make it and to age it just right. And it's been sitting in humidification for 8 years. So it's about an 11-year-old cigar that I'm probably was planning on puffing on today. But I don't like it when the weather's not perfect. Connection issues? I hope it's not me. Hang on, let me check. I think I'm pushing okay. Yeah, no, I'm pushing all right. I'm connected at about 600, so that should be pushing. I know that's pulling, but it's pushing enough. All right, well, that's good, as long as it's not me. By the way, let me show you a trick. Okay, let me just close this. I'll show you a trick. Oops. If you want a live stock indice chart, for example, or other things, you just go to tradersway.com, click on MT Web, and then what I do is I switch it to MT5. Just gives you different asset classes. And there we go. Now I'm on the S&P 500. Then I have this little plugin called Floating Player, so you can pop YouTube videos and stuff. I can pop this out now as an asset, and it asks me to log in again, which it does automatically. Put that to MT5. And now the thing is, it's not in a browser anymore. This is your Trader's Way web trader. And that's how I watch like the S&P 500, for example. Coolio, right? Cool. So I'll keep an eye on that. You're beautiful. You're beautiful. All right. So I have the popped out version, so I don't need this. Let's look at JGB or 10-year. I don't want that one. I want Japanese government bond. Yeah. All right. You should see this and immediately know exactly what I'm going to say. How many people know exactly what I'm looking at here? Like, as soon as I pop this up, you're like, oh. Anybody? And if you don't know, okay, if you don't know what I'm looking at here, type in a question mark. Don't be shy. Don't be shy. There's something very, very, very specific going on. And probably the reason why this is happening right now. But type in a question mark. Be honest with yourself. Come on. This is important stuff. This is telling you why. In fact, it's actually telling you what's likely to happen in the near future. Not what will, but it's a reason for it. Okay. And by the way, if you can't be honest with yourself, you're not going to succeed. You have too much emotion and pride locked into you being right all the time. I'm telling you, one of the most important secrets of success as a professional trader is being wide open with yourself. And in particular, not only are you strong enough to be wrong, but you're looking for reasons that you might be wrong. So if you're so caught up in your pride of being right, you're going to struggle. For example, let me give you an example just to clear that idea out. You'll probably take small wins because you're so excited to be right. So as soon as you're right, you're going to take profit and lock in your rightness. So you'll be right a lot, but you'll be broke. But on the flip side of that, you will not want to take losses. You'll hesitate on taking losses because you got too much pride on being right. So you're focused on things like your winning percentage. How do you improve it? Oh, well, you don't get out of that losing trade. Maybe it goes down 200 or 300 pips, but it'll eventually work its way back. And then you'll take your 30 pip profit. Of course, that's like the dumbest thing you could do. And you're trading with pride, which is not a virtue, by the way. Okay. So let's take a look at this. Japanese 10-year government bonds. JGB, Japanese government bonds. Okay. The Bank of Japan has enacted a program called Yield Curve Control, YCC, which is both what? Qualitative, qualitative, and quantitative. Okay, easy. In their own words, qualitative and quantitative easing. They have specifically told us in writing that when the 10-year goes above 0.25%, okay, when the JGB is greater than 0.25, they will intervene and push this down. And that's what's about to happen right here, right now, right here, right now. Yeah. It's the highest it's been all week. Let's go back a few months. Or 1 month. Okay, we'll go back 1 month. We'll take a look. Okay. Okay, 0.26 down. Actually, let's clear it out. Where's the line? Let me put the line this way. 0.25 is right here. Okay? So when we go above that line, what's happened over the last month? Down, 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 down. Holy smoke! Down, up, down, up, down, up, down, 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 down. What's going to happen now? Oh, I don't know. I can't predict the future. Past performance does not predict future results. But you think about it. What do you think? For all those that typed in a question mark or admitted that you didn't know, let me know if that was helpful. Click the like button. I'm going to pull up the video right now, and I want to see how many people click the like button. Huh? Come on. Please click the like button. Not for me, but for FXStreet. They're a wonderful host. They've been doing this a long time. We're very lucky to have them as a resource and as a support network. Show some respect, huh? Doesn't cost you any money to be here. I don't think they roll ads every 2 seconds to try to pawn you off to make a hundredth of a penny. I mean, they're good people, man. Show some respect. Thank you, FXStreet. So do that by clicking the thumbs up button. What does that take you, half a second? Come on. Kick down, come clean. Don't be a holdout machine. All right. So there we go. So pay attention. I don't know the future, but I know the Bank of Japan. So let me show you. Okay. Price stability target of 2% and QQE, quantitative qualitative easing with yield curve control. I'm not making this stuff up. Price stability is important because it provides the foundation of the nation's economic activity. And you don't know, you're trading Japanese yen and you don't know this? Oh my God. So here's my gift to you. One step closer to Illuminati. At Harvard, there's, on our crest, it said, Veritas. Okay? It means the truth, but there's sort of the truth through knowledge. The truth through knowledge. You know the truth because you know the facts. Because you are not just educated, you're smart and educated, but you're an intellectual. You know how to take the information and apply it to the real world. You're Illuminati. You're illuminated. Literally, when I graduated, they gave me a lamp, an illumination. You understand? Like a lamp, like a genie lamp, right? An oil lamp, the old style. But if you think about it, it's the idea of you are now illuminated. You understand the world around you because you can engage with not just information, but you can make informed decisions. And so you're moving towards that when you know why things happen. You don't know necessarily what is exactly going to happen, but when you look at things happening, you have the capacity and capability to understand. And that obviously would be an advantage on the long term. Cool. So you might say, well, how often do you look at this? Recently, every day. Oh, hey, Zach, how you doing? Yes. I think I was talking about how to make an informed decision. Not necessarily about myself, Zach, but that's cool. How you doing? All right. Let us take, I guess, a look at where should we go from here? Bank of England. So we have, well, first of all, have you read the monetary policy report? This came out a couple of days ago. Once again, I would assume you've read this. Okay. One of the key parts in here, and you ask yourself, well, why did the pound recently tank? Even though they raised interest rates. One of the things you'll find in here is they say specifically that they're going to have inflation above 10%. Okay. Where does it say it here? Maybe it doesn't say it here. It says it in the report. Inflation. I still, oh my God. Well, you better hold your money tight, Zach. Yeah. By the way, what, every 6 months you send me an email telling me I'm a douchebag? Okay, good. But don't ruin this webinar for other people, huh? If you're not going to contribute, you go ahead and whatever. All right, so they're saying current inflation is 7. They say it's going to 10. They also say that there's going to be a recession next year, and that jobs will be lost in the United Kingdom. And so that's very bad where like, how do I break this down? Let's do it this way. So you have growth. I guess, hey, let's do it over here now that I messed that chart up. Okay, so you have growth. Okay, and inflation that they have to deal with. Oh, my mouse. Inflation. Okay. Okay. Cool. So they have to worry about growth and inflation. Okay. Another way you can look at it is jobs and inflation, all that kind of stuff. So if they raise interest rates, they lower growth, right? So here's the problem. They lower inflation, but then they lower growth. And they don't want both those things. Okay. Now, if they don't raise interest rates, they get better growth, but then they get higher inflation. Right? So there's their problem. There's the conundrum. Okay. Okay. You see, that's the conundrum. There's no good outcome for the UK, and therefore that brings some weakness to the Great British Pound. It's going to be a very difficult situation for the Bank of England. Good morning, JGB. Yeah, but that's the thing. So in the United States, we are discussing whether there'll be a recession or not. So last night in my swing trading group, I actually gave the scenario of the difference between a slowdown and a recession and the likely outcome of those two situations, and for people to have an intellectual conversation about what they think is going to happen, to see what we can learn from people that may disagree with you or see it slightly different. Well, in the UK, the Bank of England has already said, yes, they're going to go into recession. In the United States, the Fed is trying to avoid that, but we're not so sure if that's even possible. Good morning, Stevie. Right? So there's a lot of interesting things going on. And it's not necessarily interest rates going up. It's the velocity or the rate of change in the interest rate, or right? It could be what you think the neutral rate is. It could be the terminal rate. Okay? And these are all very difficult conversations. So like in the swing trading group last night, we had the economy like this. There's potential GDP. And then we have our business cycle. And we're like, okay, we used to be here. Then we got to here, closing the productivity gap. Cool. Now the Fed says, well, how close to here are we? And the new interest rate policy is going to slow the economy down. And this is, the pink line is actual GDP. The blue line is potential GDP. And so if they do it right, if they just deal with it just right and get this perfect, we slow down this way and the economy slows down. We go back towards potential GDP. But if they do it too much, too high, too fast, too whatever, they cause a recession, and there's sort of different consequences. Now, either way, this is going to go down. I'm just using this as, it's not really correct the way I'm displaying this, but you can think of it as like a slowdown is like a pullback, but we're still moving up and to the right. Coming back around this way destroys, because the outcome is different. Where if we just slow down, what happens is, really, let me do it in green, it kind of does this. That's really what's happening. A slowdown in inflation, but then later a pickup in growth with the lower inflation in place. Now, it might take a year or two, so we're really talking about next year, but there are different consequences to the green line versus the pink line going from peak to trough again, which means we would have 2 or 3 quarters of negative growth. We would have job loss. But yes, the recession would lower inflation. Why? Because you got no money, you got no car, and you got no woman. And there you are. And that's a much tougher situation than you're going to have to stay in your lousy job the next couple of years. And you were lucky to get a raise last year. You're not going to get a raise for another 5 or 6 or 10 years or ever. So we go back to where we were, kind of. And we don't really know. Morning, Maida. Okay. So it's interesting, right? Like, this is kind of stuff that we talk about. And I think it's important, obviously, because we're talking about it. All right, so let's get ready for Trade Non-Farm Payrolls Live. So what'll happen is the market will do this on a 1-minute chart, and then the news will pop. And if it pops up, an event-driven strategy would dictate that you would buy a dip and try for a higher high. Or if it goes the other way, of course, the news comes out, oh, well, the event-driven strategy would suggest sell a pullback. It's all about a pullback. It's meaningless. It's a high volatility, a high vol event-driven strategy. Is it fundamental? No. Is it right or wrong? No. Is it good or bad? No. What's my NFP projection? Well, I'm sure you read the report, the multi-page report that I wrote that tells you how to create your own model. So your projection is probably very similar to my projection. The thing is, usually it doesn't even matter because we already have a trend in play. Okay? What matters now is we probably so I'm studying stoicism, right? So good versus bad. You might say if the number comes out 600,000, it's good. If it comes out 200,000, it's bad. But I might say, well, in the context of what we're doing, if the number comes out 200,000, the Fed will lower its terminal rate, lower its neutral rate, and maybe slow down the velocity in which it's raising interest rates. So maybe we get 2 more 50 basis point hikes, but that's it. And therefore, that's less than what's priced in. Therefore, the stock market rallies, the US dollar weakens, and we have a big move today. So I would argue a bad number would be good. But if it comes out 600K, oh my God, the economy's still red hot. Wages are going to go up. Demand is still going to be too high. Prices are going to be, oh my God, that is terrible. The Fed's going to have to raise interest rates more. Maybe now they'll have to talk about 0.75. The neutral rate's going to be higher. It's going to be 3% or more. And then the terminal rate could go all the way to, oh my God, it's the end of the world. So a good number is bad. Okay. So what I would say first is read the article I wrote many years ago for the FXStreet audience on how to create your own model. So you can do it. Who cares what my number is? But, okay, you can look at the trend in NFP. Oops, NFP. You could look at the average over the average NFP over a certain amount of time. You can look at weekly jobless claims and look at the trend there. Okay. You could look at the ISM services. Okay. In particular, their employment subcomponent. Okay. You'd look at the Challenger, Christmas, and Gray layoff report. All of that you can put into there and get your number. It's not that complicated, right? Once you know, I think you'll know how to do it. And then we could even do JOLTS, for example. Okay, by the Bureau of Labor Statistics. Let me grab that for you. Okay. And you go through that. And the JOLTS report is quite interesting. Like you can do this here. Boy, BLS is slow today. Very slow. All right, well, let me just tell you. On the JOLTS level is 11.5 million jobs available right now. These are corporations looking for people right now. 11,549,000 jobs advertised right now. So we're not in a recession currently because every company in America is trying to hire and they can't get people to work. It's the highest like ever. You see, look how many jobs. Look how many jobs. Okay, we went from 4 million to 12 million jobs. 4 million back in 2012. 300% more jobs. Can't find people. So you put that in there. Maybe they can't hire people because there's nobody to hire. Maybe we're at full employment. Big questions. So good, bad, not necessarily the way to look at this. So that's the high volatility event driven strategy. I think what we should do is just pick on euro dollar today. What we'll do is let's put this on at first an hourly chart. Okay. And acknowledge that we're somewhat trendless in the moment. And you want to identify support and resistance. And you're going to say, oh my God, Wayne has so many lines. Look, the only thing I'm looking at is this is monthly M2 as a bottom. Okay. And I'm looking at next week's pivots where if this wants to turn bullish, it's going to try for something like that. So I'd say in the article, I also teach you how to counter trend. So don't be shocked like if we have something like this today. Okay. Or if the dollar's strong, probably a big break, a big pullback, maybe even one bigger than you would think, and then a move back down. Because there's going to be a lot of orders here, and there are going to be a lot of orders here, and there are going to be a lot of orders here. So we'll have to pay attention to those levels, right? So we can mark some of these and see if that's helpful. And remember, a trapping strategy is the breach, the pullback, the sell. There'll probably be a trap strategy here where there's a down, a breach up into here, a pullback, back into here, then up into here, and then back down. It's just price action, bro. Okay? Just price action. We'll trade this on a 1-minute chart. Like I said, high volatility event-driven strategy. I've already explained it. If you missed that part, you could rewind or watch the other 192 times I've explained the same strategy. If you attended Non-Farm Payrolls 15 years ago, 20 years ago, 16 years ago, 15 years ago, I'm doing the same thing. The same thing, yo. I haven't changed this webinar in 16 years.
It's all about wages. We're really, inflation is front and center for everyone. There's not a business that's not being affected by it, so I'll stand by wages.
By wages, and that could be, it could be fair as foul, foul as fair. If it's too good, then it's bad maybe. Time for the report itself, and we'll hear from
This is weird. I got
Steve
sound from two different places.
Which should be hitting momentarily, Rick Santelli.
This is weird.
Yes, it should be hitting momentarily, and we keep our fingers.
I don't know where the other sound is coming from.
Through. I would just, as we get ready, I still don't see the numbers coming across the wires. Remember that it was in 2000 that the NASDAQ first traded over 5,000. It took another 15 years to get back over it after the tech wreck. Still
it must
don't
have
see
popped
the numbers
somewhere.
Populating yet. Here we go. We're starting to see things trickle in.
Sorry.
I can tell you right now that the unemployment rate moved from 3.6.
I can't turn it off. I don't know where it is coming
so
from.
We're still hovering at some very lofty levels, and I do want to point out 3.5 is where we were prior to COVID. Now on the 2 months of payrolls, there's a revision of minus 39,000. Still don't see all those numbers. Average hourly earnings.
It's weird. I don't know where
month basis were
CNBC is coming from.
That is a miss. If you look at year over year, they were up 5.5.
Glitch in the matrix.
Solid number. And on jobs, 428,000. This is our 12th month, and even dozen now over 400,000. I would have picked 410,000, so I would have been close. 406,000 is private pay.
It's weird. I can't find out where it's coming from.
Well above expectations on manufacturing. And if we look at the work week, 34.6, same as last time. We were looking for a little bit more out of that. And here we go. The labor force
It's so funny.
rate.
Where is it coming
looking
from?
At this, and it is a miss. 62.2, 62.2. That's 0.2 down.
Oh, I found it.
62.4. Our last look.
Finally.
Just to point
Too
out,
many
where
windows
was it
open.
pre-COVID? Well, in February of 2020, it was 60.
All right. There, 428. There you go. Okay. Good, bad, bad, good. Good is bad, bad is good. Okay, so we can go through that. Okay, you can look at it from a higher time frame and try to figure out which way you're trading. Okay, see? Okay, hang on. So we'll go through that in a little bit. What else? What else? What else? La, 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 la. Regional home pages. That's interesting. All right. Compensation for March. Yeah. Dollar looks weak across the board, man. Let's move back to here. Okay. Seems that the stock market's going to be up. Well, we can take a look at that. What's the reaction here? Hang on, let me put this back. Okay, Aussie catching a bid. Pound stabilizing. CAD actually coming down. Was there CAD jobs today? Okay, pretty good, pretty interesting. We have pound dollar on the hourly 21. It'd be interesting if it could recover. Is that what it is? Yeah, CAD's getting crushed. Thank you, Arve, Master Trader. Positive response so far. I'm going to trap it. Well, don't forget about the yen. You got to be watching the JGB yield. Oh, this is the wrong one. This is a U.S. yield. Oh, and wrong site, too. Yeah, you got to be careful. There could just be out of the blue Japanese yen weakness. So you got to be careful. It's not crazy yet, but it's certainly plausible. Yeah, I have the same as Jim. Well, the thing is, like, Johnny, you said you were worried about it, and the way I translated that, and it could be wrong, was more like you want to buy the yen, but you can't because of that surprise, right? And so it's more like, so my response, and I said it later in the meeting, but I'm like, I don't worry about it as much because I'll sit down. I want to trade during the Asian session. And before I make any decisions of whether I'm going to buy the yen or not buy the yen, I got to log in and check to see if the Bank of Japan is going to intervene and weaken the yen. So I just very quickly look, 0.225. Oh, I'm in the free and clear. So I go ahead and buy Japanese yen. So it's just like, nah, I'm not afraid. I'm just aware. But if it's up there like, oh my God, we're practically at 0.25 now, then I'll probably skip the Asia session, or at least not buy yen that day, or that session. All right, cool. Actually, I haven't even looked at any of this stuff. It's all the same. Is it all the same stuff as? No parameters. Cool. Okay. Cool. So if we can bust out here, that would be continued US dollar weakness. Okay, so that's why we're watching that. Remember, dollar weakness is good. Once again, don't think... A lot of people like translate weak dollar into bad. I'm like, no, weak dollar is good. All right, so anyways, Aussie catching a bid. Euro still strong, but pound is still weak from yesterday. Okay. If that JGB yield continues up, this could just drop today, and someone on TV might say, oh, well, that's because the stock market, blah, blah, blah. No, it would be because of the Bank of Japan. So, yeah, pay attention. I'm watching it in real time here. We're at 0.251. If this goes up towards 0.256 or 7, Japanese yen is just going to weaken like, chow, bam, bam. It'll just weaken. Aussie dog's doing the best right now. Let's watch that for a while. Maybe even Aussie Swissy, huh? Do that for just to be different. Actually, you know what we should be doing is crude. Let's do some commodities, man. Okay. Don't be crude. Boo. Oh, don't be crude. Boom, 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 boom. Well, that's what I'm saying, Luis. Or Lewis. Lewis? Yeah. That's what I'm saying. You think they're up now? If the Bank of Japan steps in, we're at 0.252. If this chart keeps coming up, suddenly the yen is going to get really weak. More weak than it is now, which would push all those yen pairs up. Okay? So we can go there if you guys want. Baby, it's just you I'm thinking of. So let's just do Confluence. So if you believe they put a man on the moon, man on the moon. No, if you believe this is bullish now, okay, then you would do this Daily confluence, okay, bullish. And we'd probably do this more like on a 15-minute chart. It shows you where we are in that process. If the Bank of Japan now intervenes to lower that JGB yield, part of their yield curve control, you're going to get one of these things. Okay? See, I can see the bears here. There's definitely bears in this market. This is a monthly M2 where bears sell. But look at this. I have this chart set up bullishly. Okay, see, look at next projected buy zone. So obviously I'm a buyer if I have it set up this way. But I can tell you, let's do this in orange. This is the exact price a bear would sell on a daily chart. Or not on a daily chart, on a day trading plan. This is a day trade. Like not kind of a day trade or pretty much a day trade. That is a precision day trade. In fact, it's so precise, you can see it even covered the spread. It included the spread there. To sell high, it had to go a little higher. To sell at that number, it had to go a little higher to catch the ask. It's perfect. It's perfect. Like, it's incredible. Now, it didn't follow through much, and that's what happens around non-farm payrolls. Okay? But nonetheless, it did precisely what it was going to do. So there's going to be a lot of stops in here because those traders would have jammed their stops at break even. And all of a sudden, by the way, 0.253. So if the Bank of Japan comes in, what will happen is we'll do one of these and all of a sudden, intervention, and then boom, we'll cut through this. We'll hit all those stops. All those bears have their stops at break even, and we're testing them now. And so if we blow through them, just the bears buying will push you to the next level. You understand? Why would a bear buy? Because they're offsetting their short position with a long position. We call those stop losses. So if all those stops are there, those are buy orders. Buy to get out of a short position. Hey, it doesn't matter. Bears are buying. That's why bulls need to buy low. Wow, look at the flipsy floppy. Uh-huh. That's why you trap it. Okay, stuck. Pound dollar, I think, has got the best story. Let's go look at pound dollar. Let's flip over there. Piggy, 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 can't you see? Sometimes the words just hypnotize me. And I just love the pound dollar, pound. Okay, let's go here. Let's get out of this. I guess we can leave it here. What I'm getting to is this hourly 21. Look at the battle going on here. This is clearly a bearish market, and bears are going to try this. You can see the battle going on here where price hit the 21 EMA, dropped, as it should. Then we get this news-related volatility. All we did was go up and test. Okay, let's make that yellow. All we did was come up and test that same price area, and it held once again. Bears do want this to come down. The trend has been down for pound dollar. So we get this news, the market goes blip, 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 blip. But people do what they need to do, and there are orders there to sell, and so far, that's what's in play. So, it'll be very telling if the next candle is like that. Because that could be, a swing, which would then project lower. And you're like, Wayne, help me, Wayne. Help me, Wayne. Project how low? Well, from a bearish point of view, 122.28. The massive what? Yeah, that's legit, right? Down to 122. It's only 150 pips. Don't get excited. But it's a trade. Not the 10-year, though, construct. Okay, Japanese government bond, 10-year, now at 0.255. Yeah, construct, I believe you're talking about the Fed funds rate. So let's do that. Fed watch tool. Cool. Is this the one you're talking about? Yeah. So that's the June meeting. 87% chance the Fed hikes by 50 basis points. There's a 13% chance they only raise by 2.5. Oh, no worries. I looked at it, I thought about it, which is important because that means I was listening. Okay. Jim Rogers is a billionaire. He made all his money trading commodities. And he always thought having a family was stupid and having children was a stupid idea because all they do is slow you down and suck out all your money. Well, by the time he was 70, he had billions of dollars. And he decided, I want to marry a 30-year-old woman and have kids. So he did. Hey, he was 70, or is 70. So now he's probably 80. So anyway, so he wrote a book because he knew by the time his daughters were college age, 20 or something, then he'd be dead. So what he decided to do was write a book and give advice. So I bought the book. And one piece of advice that he was giving to his daughters was that you should be able to calculate basic math very quickly in your head. And his rationale was, you go to a meeting, inevitably some person stands up in front of the group, knocks out an Excel spreadsheet on a PowerPoint, and proceeds to tell you their smart idea. And he said 99% of people will just gloss over and go, oh, yeah. And he said there's almost always a mistake. And people just can't see it, they can't spot it, they can't do basic math in their head. They can't just look at it and say, hey, wait, that doesn't make any sense. Jim Rogers. So that was one piece of advice he gave to his daughters, who were at the time like 2 years old. So he wrote it down so when they were 20, they would at least have maybe taken his advice, and as they matured in age, they got really good at doing basic math in their heads so that they can be the one person at the board meeting or at the sales meeting or at the finance meeting or whatever it is to say, they raise your hand, you're like, hey, that doesn't make sense. Everyone else will just sit there and go, uh-huh. Because remember, most people are above average. So anyways, I heard you, and I think that was great. Because I heard you and I saw it, I noticed the small mistake, but now that was great. Which means I knew what you meant because I was paying attention. And it's a compliment. So here we are anyways. Okay. It went from 83 to 87. Okay. 1 month ago, it was 27%. Now it's 83. You see the difference? Okay. Pigs coming down. Luflitulumum. What do you think? That means this dollar should be strong, has been strong, should be strong. The blip in the matrix is come and gone, and it's trend on. Trend on, Bubba. All right, be careful with the yen. Shields up. Shields up, everybody. Shields up. Be careful here. Be careful. Okay? Be careful. The trading desk at the Bank of Japan might come in. I'm telling you now, this is serious. Yeah, dollar pairs are just, oh yeah, that pound is kicking off that hour 21. It's beautiful. Okay, I want to watch this because everything else is just going back. Dollar is strong again. That's great. That's fine. Lufle. But this could change the yens. Okay. Cool. Let's just watch this for a little bit. It's just another reason, this yield curve control is just another reason that this particular year seasonality is unusual. Or we should say market action is unusual, because seasonality is normality. Like, it usually doesn't snow in May in Canada, but it has. It usually doesn't, but it has. Would you plan on snow in May? No. But it can happen. It has happened. So it's like, what's usual? And then part of your analysis is, how usual is this year relative to a normal year? And if it's unusual, in what way, and what is the consequence of that? Pound dollar crossing 123.20 down. What do you think? I already covered that, teacher. 1.22 is the target. But I said that 20 pips ago. You're about 20 pips late. Oh, I'm just talking about for between now and Monday construct. Oh. Okay. Well, I still think it. Well, Meta's $5 is lasting for eternity, huh? Good return on investment. Looks like a bit of a storm going on outside. It went from gray to windy to now stormy. Cool. Is that it? Is that the start? Nope. So the funny thing about what we're watching on that JGB yield is the higher it goes, the more likely it comes down. Okay, we're hesitating here. Okay? Well, if the yield is rising, what's happening to price, Barb? Just as a basic concept of the bond market. If yield is rising, what's happening to price? Yes, prices are falling. So, investors and holders of Japanese government bonds are fleeing Japan. They're selling their bonds as fast as they possibly can, and that jacks up the yield. Now, the Bank of Japan has said they don't like that. So they've said that they're going to keep the yield below 0.25. So remember, if the yield is going up to 0.25 and higher, and what's causing that is the bond market is crashing, the JGB market's crashing, then how does the Bank of Japan stop it from happening? They're like, we don't want it to fall any further than that, so we're going to do something. Andrew, they have a dealing desk. They don't close at 5 p.m. No. First of all, they're trying to keep rates down. Think of it. If a falling market raises yield, how do you prevent yield from going higher? Try again. No, not QE. You guys are complicating things. It's not complicated. The market is falling. How do they get it to stop falling? Don't overcomplicate it. Okay. By the way, here's the actual framework. Most people at FX Bootcamp have already read this a month ago. They've read this. If you haven't read this, you don't know what you're doing. Anyways, let's go back. I wanted to get their qualitative and quantitative. I wanted to get their press release though. Monetary policy releases, maybe. June. Gee, criminy. Yeah, the English site sometimes isn't. This isn't quite the right one. This isn't necessarily YCC. So I want to go back to the YCC one. Fixed rate purchase over consecutive days. Sold. Maybe we have one in the meeting minutes. Anyways, it used to be right on the homepage, but you know, I haven't looked at it in a couple of days, and all this has moved since then. Maybe we can do the whole list. Statement of monetary policy, announcement of fixed. So there was an update to this. I guess under the pressure of doing this live, balking. But I wanted to make, I wanted to find something specific. Oh yeah, this is what I'm looking for. So this is old now, and they've updated this, but nonetheless, it makes a point. The Bank of Japan will conduct fixed rate purchase operations for the following. They will buy 10-year JGBs. They're going to do it on these days. And they're going to buy as many as they want. They will buy all of them if necessary. And they are going to keep interest rates at or below 0.25. So if it's 0.26, 0.27, 0.28, they will simply buy all of them. Lower it back to 0.25. They tell you what days, which specific bonds, and their exact goal, and how many they're going to buy. And if you don't know this, you are not trading it properly. At least you should know. And of course, I've now killed the chart, right? At least you should know. Okay? I mean, come on. So let's go back to 10-year JGB yield. Okay? We're getting closer and closer to that intervention. Okay? So this, what you see now, could significantly change this morning. Okay? Barb says central banks can influence prices for products if they buy. Just think of it. Bank of Japan said in writing, they will buy everything if necessary. Everything. They have unlimited amount of money, Barb. So if they come into the market and they say, okay, this market's falling, it's going to stop falling right now. And if it falls any further, we will buy everything with unlimited amounts of money. So they put a floor. They literally say, whatever price puts the yield at 0.25, they will start buying, and they will buy everything. Every single bond. As investors flee Japan, the Bank of Japan will buy everything and keep interest rates, or in this case yield, no higher than 0.25. Now, if it drops back down to 0.22 like it was 2 days ago, don't worry about it. Then they stay out. So you're like, you could have, I held a special meeting and talked about this for probably an hour. Every single person at FX Bootcamp knows this. You should join FX Bootcamp. Hey, by the way, FX Bootcamp is $88 a year. Does anyone remember when it was $1,000 a year? Now it's $88. I know, big sales pitch, right? Yeah. There you go. You should join. It's $88. If you don't have $88, I can't help you anyways. And but you got to be careful. As Zach said earlier, I might steal your $88 and give you 65 hours of hardcore training. So be careful. All right. Yeah, 27th and 28th. Oops. Yeah, 27th and 28th is right here. And by the way, when we were there, I held a special meeting. I even did we got together at like midnight my time to be there anticipating intervention. It's crazy. Yeah, well, that's good. Like Kiwi, for example. Let's talk Kiwi. Let's talk Kiwi. This, you might find this interesting. I think I got this one right. Yeah. You know what this is right here? My projected high for 2022. Did you know that? We knew that back in December. Now, did we know it would do that precisely? No, you don't know that. But that's the tools we use. So on January 1st, if somebody said, hey, I'm really bullish on Kiwi yen, what's your projected high for the year? I would have said, well, conservatively 85, aggressively, okay, 87.5. Well, it's actually just 87. So, right? So somewhere between 85 and 87 on January 1st. It's not my opinion, by the way. I don't have an opinion. I'd say, well, you know, the analysis I use would dictate that. Now, an opinion part of this is then what happens if you hit that early in the year? Like you're tapping out on the 20th of April. What do you do now if that is the high? Ooh, that's a counter trend trade, right? So I can reverse engineer this with those pivot points. But also, we are in the second, this mouse, in the second year of an 8-year cycle. It's a political cycle. Poly-psych. That's funny. It's a different cycle. Different psych. Okay? We're in the second year of an 8-year political cycle, which also then changes the model. So, are you putting that kind of thought in? I would say at least half of the people in this chat right now have already done this and put those considerations into their trade planning. Okay? So if you're not, all I'm saying is just out of everybody in this chat room, you would be below average. I would say at least half the people in this chat room have gone through and done that with me. And those are the things they're putting into their considerations. And if you're not, then by definition, you are below average. And you say, well, hell, Wayne, blah, blah, blah. Don't get mad. Jeez. Getting so upset. Okay? I'm just saying you can and perhaps should be doing that type of analysis too. I don't care if you believe everything is in the price. That's fine. But you should still understand. I mean, look, let's put it this way. If these prices are obviously in other people's trade plans, then even if you're a price only person, you're like, Wayne, I don't need to know fundamentals. Wayne, understanding what central banks do is just stupid. Hey man, I disagree with you, but you can disagree with me. That's fine. And you're like, I can still trade profitably. Great, good. I'm super happy for you. I'm just trying to show retail Forex traders some of the considerations that go into more professional planning. But you're like, this is what I do and I'm a great trader. Good. But I think you could still agree that, remember, we knew this on January 1st. So as a price-only trader, wouldn't it be nice to have this type of accuracy? At least you could say, well, I think in here it'll turn bearish. And now you use whatever techniques you use to make sure you get on the thing versus not expecting it. Okay? That's all. That's all I'm saying. I'm not trying to say you're a bad trader or a bad person. I'm right. And I'm not saying I'm a good trader or a good person. I'm just suggesting that this could be useful no matter what type of trading you do, trading strategy, trading techniques, style. It would be nice. I think it could be helpful if you're like, hey, just heads up, we're at the projected high, this could flip. And then it flips and you're like, cool. Well, Barb, that's at FXBootcamp.com. No, I didn't say bad trader. I'm just saying you should know. And look, if half the people in this room knew this before it happened, and the other didn't know it before it happened, who has the strategic advantage? Maybe tactically you're still a better trader, but strategically to know that that is probably going to happen is a strategic advantage. How you capitalize, well, that's a whole different story. Right? Now, are they always that perfect? No, of course not. But it is useful information. Right? It's useful information, I think. By the way, again, if you find that helpful in illuminating, would you please click the thumbs up button? And again, not necessarily for me, but definitely for FXStreet. Thank them for being a host on this webinar now for more than 16 years. You don't trade the Kiwi. You're kidding me. Why would you not trade the Kiwi? Holy smokes. All right, so let's take a look around the world here. And thank you, by the way, for doing that. That's 10 more likes. I appreciate that, and I appreciate FXStreet. So remember, this goes to all this goes to FXStreet, not me. So that's, all right. Thank you, Roderick. All right. Cool. A fractal, there's just different words for it. So let me pull up this one. This is a fractal. Okay. What is it telling us? Tops and bottoms. Based on whatever definition you put on there. Okay, what it's doing is looking, again, I don't know what the settings are. Remember, I put it on there and didn't even allow me to change the settings. But what it's looking at is higher highs and higher lows relative to the other candles. So once it stopped making lower lows, it was marked. Once it stopped making higher highs, it was marked. Now, I marked it manually like this. So that's what I was doing. Essentially, fractal analysis. Now, I don't call them, right? I don't call them fractals. Okay, you can call them swings, support, resistance, because what you're trying to do is connect a bunch of these things. But let me show you multiple different ways of doing that. So we'll go to a chart setup like this. And it's also measuring fractals, but using a completely different methodology, but it's a similar idea. Series, oops, let's do it in yellow. Series of tops right here, so it marks that. Here's a bottom, here's a top, here's a bottom. Well, what is it looking at? Well, when it turns this way, it just drops a line. When it turns this way, it drops a line. When it turns that way, it drops a line. When it turns that way. So it's just looking at, like, you know, candle, higher high, candle, higher high, candle, higher high, candle, not higher high, candle, not higher high, and lower low, fractal. Okay? So it's just looking at the candles. In this case, I do this manually as I trade all the time, where I'll say, okay, I might do something like this. And so my trade plan would be, if it breaks to the upside, buy the dip. If it breaks to the low side, sell the rally, but be careful in here. And if it does this, okay, buy off the bottom, be careful of this. And we're just, you know, Okay, cool. Do you know another indicator that would do the exact same thing? I've showed you two different ways. You can throw on a fractal. You can throw on some other, like, measure higher highs, low lows. What's another way? Let's do Aussie Swissy. Okay, insert indicators, oscillators, stochastic oscillator, 853. Okay, cool. What am I doing here? Fractals. How does it work? Okay, stochastics is looking at whether these candles are making higher highs and lower lows. So in here, lower low, lower high, lower low, lower high, no lower low. Lower high, lower low, right? Almost a higher high, not a lower low. You see what it's doing in here? Suddenly, higher high, higher low, higher high, higher low, higher high, whoa, big move, higher high, higher low, higher high, higher low, higher high. Look, it's going up. It's going up and up. Okay, a little bit of a pullback in the matrix here. No lower low out to here, but definitely struggling for the higher high. That's why you get this stuff. Then all of a sudden, right? Higher high, higher low, higher high, higher low, higher high. So it's going to keep moving up. So what stochastics is showing you is it's measuring price's ability to make lower lows and lower highs, and then higher highs and then higher lows. Okay? And then lower lows, lower highs, and then higher highs and higher lows, and lower la 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 la. It's doing things like measuring the fractals. It's trying to say, this is a bottom. Okay? Okay? This is no longer making higher highs. Oh, try it again. No longer making higher highs. Oh, try again. No, right? No low. Oh, try again. Okay? And then do. So if you're just looking at this zone, It's not telling you sell. It's telling you price is having trouble making higher highs. Here, price is, right, having trouble making lower lows. So it's not enough information for just buying and selling and buying and selling and buying and selling. And very often oscillators are sold by gurus to say, oh, you just buy, MACD at the bottom and then you sell it at the top. That is not correct. That's not how that works. So you need more information than that, but that's what the oscillator is telling you, its ability to make higher highs and higher lows. Okay? So if you do something like, when you're at support, and that's what this gray area is. When you're at support, remember, support. Remember, when you're at support, what we're most interested in is, will I have an opportunity to buy at support? Bears do not sell at support. So that's impossible. But bulls have the opportunity to maybe buy at support. So how does a bull decide? Well, one way you could say is, when you're at support, okay, no matter whatever you measure it, you start to look for this kind of move, which tells you, hey man, you're at support, which you figured out through other analysis, but now your oscillator is like, hey man, it's now not making lower lows. You're at support. It's not falling. And in fact, it's starting to make higher highs. So you translate that to that as an opportunity. Okay, you see? And that is very much similar to a fractal, because an oscillator is looking for the lower high, lower low, and then all of a sudden higher high, higher low. But that's what a fractal is doing. And that's also how you trade support and resistance. That's also how you do price action. Price action is very similar, because let me put this back to just a simple template. Okay. With price action, okay, you're looking at suddenly it made a higher high and higher low. So you buy the dip low. Then it makes a higher high. You're up here now, right? So what do? You drag this across. Old resistance potentially becomes support. Okay? And you keep that process of higher high, higher low. Okay? You can see in here, higher high, higher low, higher high, higher low, higher high, higher low, higher high. The thing is, all of a sudden, there's no higher high here. You see this? Is it predictable? Well, for maybe other reasons. I'm not saying you would, should, or could know, but very often there's a reason. And, I'm not going to pull that pivot point up or whatever it is. It doesn't matter. The point in this conversation is, a different measure of a fractal. What is a fractal? Well, once you get no higher high, the lower low is important, because soon as you get a lower low, especially after a double top, you immediately go into bearish mode. So you take old support, you drag this across, and you say somewhere around old support, and it's actually a little bit lower than that, right? Somewhere between around old support will become the new resistance. Then it makes a new lower low. And you're like, cool, man. Somewhere around this old support, it will become resistance. And those are the basis of your trade plans, because that means when it's up high, you're a seller. When it's up high, you're a seller. Now, once again, that's oversimplified because there's other things going on, fundamentals, longer trends, there's daily pivot points, weekly pivot points, monthly pivot points, annual pivot points. There's a lot of other, right? You'll get better and better over time understanding sort of like why these decisions are being made and why there's turning points. But the issue is what we're discussing is what sort of techniques, whether it's a fractal, whether it's an oscillator, whether it's price action, how do you understand these turning points? And there are multiple different tools, and which are just different maths, different algorithms for processing this type of information. Okay. There's my coffee. There's my coffee. Peter, Bollinger Bands are simply a measure of volatility. If you listen to John Bollinger, he'll tell you that most people that use Bollinger Bands are using them in ways that he either doesn't think works or in ways that he never intended. Very often he's said things like, I never said that. What do you mean by a 90-minute trading strategy? No, this account I cleared out before non-farm payrolls. I've had quite a bit of trades on here. I think, actually, that's right. I was testing an EA yesterday, and yeah, so I cleared out my trades and I threw down an EA, and I was trying to learn from the EA, and I think I lost money for sure. And so I'm like, yeah, that doesn't surprise me. It was doing something interesting, and I thought, first of all, I thought, can I get it to work? And of course, the answer is I'm not going to spend that kind of time. The second thing, though, is I thought it'd be an interesting way to coach with, right? This is my coaching account. Right? And anyways, no, it didn't work. Didn't work very well. So I think I'm down $500 or $600 or $700 from that. But I'm still up something like 15 or 16% for the year on this coaching account. I was at 33 and I drove it up to 38, something like that. But am I anything right now? No. I am going to start rebuilding probably, Monday. But because I was testing, so that EA threw down, many trades yesterday. Look, this is all yesterday. And yeah. So, anyways, I was messing around with it. So you can see, right? Make 15, make 6, break even, $1, lose 13, 1. And it's like, but it just slowly. And look at this, all yesterday. Look, 5, 6, 5, 6, 5, 6. So yeah, and all here's 5, 5. So anyways, you can see what I was messing with it. But despite all of that, I'm still up more than 15% for the year, which ain't bad for, I think, a tough year. But J-Man says, hey, what are the best series of indicators? In my opinion, 2 things. Do you need these moving averages? No. I like them. They're helpful. I think you have to learn how to read them properly, but let's kill that. Oops. I guess I can do it this way. Okay. Can I trade with only price and time and no indicator? Yeah, I can. Okay. Yes. Is this enough? Yes. Is it optimal? No. But price action is enough. So again, going back to our fractal conversation, I noticed the top here. And then the most important thing I see next is the lower low. So I sell the lower high. And why would I sell a lower high? Because I expect the lower low. So it makes a lower low. What do I expect next? A lower high. So I sell the lower high. It makes a lower low. Okay, so what do I expect next? A lower high. So I sell the lower high. I expect a lower low. So what happens next? Lower high. I see the lower high, so I sell the lower, right? So I sell the lower high. It makes a lower low. So what do I expect next? A lower high. So I sell the lower high. It makes a lower low. What happens next? Oh my God. Okay. And there's a huge reaction. I'm like, oh my God. So somewhere in here, I probably want to bail. It's not complicated. Once it makes a higher high, I expect a higher low. Okay. Not complicated. But is it optimal? No. So what could I add to this? Okay. What could I add to this? So we could say, well, let's add a pivot point. And what are we trading? Aussie, Swissy. Okay. So we can do a confluence of weekly and monthly pivot points. That's all. Weekly and monthly. Weekly and monthly. Now, I still have my price action because no matter what happens, we still have the price action. So I see a double top. Oops. I see a double top. By the way, we were on weekly. Now I'm on hourly. Looks like the same trade. No, I see the double top. Then I spot the lower low. I expect the lower high. So I look at this level in here. We call that a roll reversal. And I expect a lower high. Then it makes a lower low. Now what? I expect a lower high. Okay, so I still got price action, but what else? This pivot here is a monthly sell. This here is a weekly top, which tells me this might have some legs for a little bit. Cool. Nice. Okay. It's giving me other levels, like somewhere here this might turn. Okay. That's all. It's a heads up. Okay. Which says, oh my God, dude, if you get a double top here, take profits on all this bullishness. And then as soon as it makes the lower low, expect the lower high. Why? Because you're going to sell it and you expect a lower low. Then you get a lower low. Now you expect a lower high. And when you sell it, it's because you expect a lower low. And when you get a lower low, you will expect a lower high. Okay? This is a sell zone. This is a sell zone. This is a sell zone. This was a buy zone. And this is over. So, to answer the question, where did it go? I don't even know. What indicators? What are the best series of indicators to place a trade? I think you need a minimum of two things. Price action. Now, if you don't know price action, you can't trade. Don't worry about it. You're going to lose all your money. You don't know how the market works. You just don't get it. You just don't get it. I don't care what other tools you use, oscillators and moving averages and Elliott wave. Well, actually, Elliott wave is based on price action. So like if you don't understand this part of the technical analysis, you just don't know how to trade. Okay, you don't get it. You don't even know how to use your tools right. So anyway, so that's that. So you need to know price action, and then I prefer, because price action is a leading indicator based on what has happened recently. Pivot points, okay, are the other thing I really love. Pivot points, like need pivots. The reason for it is it tells you based on market conditions, what is likely to happen next, assuming things don't change? Well, things do change, but there's a basic assumption to the algorithm. Okay? Based on last month, this is what this month could look like. And what it does is there's two things. This is price action. Okay? And if I renamed pivot points, I would call it market forces. Okay? Based on the previous market. Now, the previous market might be the week. So, right? So here's last week. And then they say, well, based on last week, here's the projection for this week. Now, it's not perfect. Okay? But I can tell you, if you take my training course on FX Bootcamp, it says if you buy this pivot, okay, this is the best price you could expect. Now, expect. It went a little higher and then collapsed, but what does expectations mean? Predictable, best case scenario. Now, there's always a level of luck and unluckiness, unusualness, a level of randomness. You cannot control that. Okay? But a Stoic would say, look, you could be afraid of the randomness, or you can take control of what is not likely randomness. And the pattern, the repeatable pattern is take profit right there. This is an entry. This is a take profit. What happens next? Well, there's your randomness. None of this is random. Sort of like this is the projected high of that particular week. It says you should take profit and leave. Well, you could have stayed in a little bit longer. Yeah, you would have wasted a day and you probably would have held on longer. Plus you now incorporate randomness into your trading, which is going to lead to inconsistent results. Consistently leaving there is quite predictable. Check this out. Projected low for the week. Look at this is aggressive target. This is conservative target. There's no randomness here. Okay. Here's a big quiz. Here's a big quiz to everybody here. In this scenario, there's going to be two parts. You don't have to give me a specific price, but in that scenario, think about what I taught you, what's in the course. Do you buy or sell, and what is the target? I want to know, in that scenario, do you buy or sell, and what's the target? And by the way, I see that you can see what occurred. I want to know what the training course tells you, because I did that years and years, over a decade ago, probably, that video. In that scenario, do you buy or sell? And what is the target? Come on, let's see 10 or 12 answers. I want to know if you know. No, it does not depend on the time frame. Jeez, criminy. How can you trade like that? No, it does not depend. It's a binary question. Do you buy or sell, and what's the target? Now, the target is not a binary, but I get it. Do you buy or sell, and what's the target? I have two people that answered. If it depends, you'll never be able to make a decision. Okay, I got 3 answers. Let's see 10 or 12. Come on. 104 people. You're telling me 95% of people here have no idea what to do in that situation? Remember, it's a 2-part question. Do you buy, and what's the target? Oh my God, some of your answers. Holy smokes. We got some work to do, I'm telling you. First of all, answer the question. Do you buy or sell, and what's the target? All right, this is enlightening. This is a basic question, guys. And your answers are all over the place. Look at, yeah, come on. Some of the answers are just so vague. You're listening to other gurus on YouTube, aren't you? Give vague answers to stuff? You're kidding me. All right. This is in the training course. It's probably even in my book. I can't be sure of that. But the video I recorded probably 8, 9, 10 years ago, it's a very specific, clear answer. Okay, this is a counter trend trade. You buy this, and the target is the central pivot point. What it says is very often, but not always, it goes to the central pivot point. And that point, I don't really know. I haven't seen consistent results of whether it goes this way or that way. But the consistent thing is, this is an bearish exit. At the very least, bears will exit, which will drive this up. And then usually, since it's so early in the time period, some bulls drive it up. So the general target is a central pivot point. It's not vague. It's not, well, it depends on the time frame. That's nonsense. That's not an answer. The answer is you buy it and try to take it to the central pivot point. Do you do that on a Thursday? No. No. It's very specific. Do you do it on a Monday? Yes. Yes, you do. It's right. It's one of 2 counter trend trades I teach you. Okay. You have to understand the reason I call these pivot profit zones is this is a bullish exit. It's not a sell zone. This is a bearish exit. It's not a buy zone. It's a buy zone for bears. This is a sell zone for whom? Bears? No, for bulls. That's where it all starts, guys. That's why you get stuff like we hit it, it drops, then it rises, then it falls. Here, it hits it, rises, retracement, then it goes up. Here it goes here, it comes down there. Why is there always like double tops and double bottoms? Okay, the first move is bulls selling. The first move is bears buying. The first move is bulls selling. I want you to think about this. Why is it opposite? What is a basic universal truth of trading? A bear only sells resistance. Okay? One touch is not resistance. So, to bust everything down, there's tops. Okay? Tops are double tops, triple tops, quad tops, whatever. One touches are not a top. So bears sell tops. And bears sell lower highs. There is no other scenario in which a bear sells. I want you to contemplate that. There is no other scenario, top to top to top to top, 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 however you define a top, but it's not a one touch. It's usually a double top. Or lower highs. Double tops, lower highs. That's it. So to get it to work, bears need bulls to get out. That's bulls getting out. Okay? For bulls to make it work, they need the bears to get out. For the bears to get it to work, they need the bulls to get out. This is a symbiotic dance, ladies and gentlemen. Left foot forward, right foot back. Right foot forward, left foot back. Bulls and bears work together. All time frames, J-Man. In what scenario does this not hold true? There is no other truth. One minute. So I've traded on the 1 minute, the 2 minute, the 3 minute, the 5 minute, the 15 minute, the 30 minute, the 1 hour, the 4 hour, the daily, and the weekly. Scalp, spot, swing, position, carry. There's no scenario in which this does not hold to be true. It's called fractal geometry. There's no scenario in which this does not make sense. Okay? Which means you have plenty of time to set up your trades via planning. Here's a double top. You could sell that. Okay? Here's a lower high. You could sell that. Here's a lower high. You could sell that for sure. Okay? What if you're up here? Well, that doesn't look like a lower high. That looks like a higher high. Okay? Okay. No, I don't think so. I don't believe that to be true. Absolutely not. Okay, look. Okay, check this out. I get together with my day trading group. Actually, let's start on Thursdays. On Thursdays, we meet as a swing trading group and we plan moves like this. A day in advance. Actually, on Thursday, we plan Monday's trade. Sometimes you take it on Friday because it presents itself, but it doesn't matter. We just call that front running. But we meet on Thursdays to set up next week's trades. So already we're planning stuff a minimum a day in advance, usually 3 days in advance. Cool. So the market opens Sunday at 5 p.m. Eastern time. Guess what? I meet with my day trading group at that time. Actually, no, we meet a couple hours later. But anyways, I'm at the market at 5, and then again, I'm at the market at 7, and I usually stay around, but it doesn't matter. The strategy is what matters. And look, M2 on the weekly. That's actually a monthly as well. But what I'm looking at here is, what is this? I can't read. 68.46. Yeah, 68.46. At 68.46, that's a buy for the week. And the most aggressive target you can expect is that price, 70.39. That's what it says. By the way, we would have planned this over here. So you show up on Sunday, okay, J-Man, and you already know what your plan is. You did it on Thursday. So now you show up on Sunday afternoon when the market opens, and the price is 68.46, and your target for the week is 70.39. Okay, the market opens around your price, so you buy it, you put your stop, and you're done. You're done. I'm telling you, done in a matter of 5 minutes. And you walk away, you're done. For the entire week, you're done. We planned it on Thursday. You take action on the market open and you're done for the week. That's a swing trade. For that, you would need to join my swing trading group. But it's all in the training courses. So for $88, you can learn all this stuff. Do you have to spend as much time as me in front of the charts? No, but I love what I do and I don't do anything else. So I have the luxury. So I sit at my charts scalping oil during Shanghai Open because I love it, but I don't need to do it. No. If you don't have that kind of time, you need to learn how to swing trade. Okay. By the way, if there's follow through, and we don't know there is, but what does this chart say? Remember, it's not my opinion. If you're a bull, okay, you bought this bottom. Great. You bought it on May 1st. Great. What's your target? Okay, your target is 71.18 to, I can't quite see it, 72.04. So let's just dumb it down. Your target is 71 to 72. You're buying it here at 68.5. You just planned out the entire month of May. Oops, 0.6850. You just planned it out. So you're buying it around 68, 69, whatever. You're dragging it up to 71, 72, and you just planned out the entire month. You just planned it out. So you buy it on the first day of the month, and you're done. What do you mean you have to spend 9 hours, 10 hours, 15 hours in front of your chairs? What do you mean? You just buy it there and you're done. Now, if you were a bear, you're like, oh, but Wayne, that's like, you knew the future. How are you so smart? Whoa. Check your negativity at the door, son. If you were a bear, you would have sold this and your expectation would have been here. If you were a bull, you would have bought this and your expectation would have been here. Bulls, bears. But there's no randomness to any of this. Okay, that's a Friday front run. That's a Monday morning entry. And you're done. I mean, you're done. That's it. That's the whole month of May. One of you is going to be right. The other's going to be wrong. And that's normal. But I think where you get slaughtered is the 27 trades you made right here. Okay. What would a bull do now? Okay. Well, bottom. Okay. Got a higher high. So what does a bull expect? Higher low. Buy. Gets a higher high. What will they expect now? Higher low. Where? Around here? Yeah. Cool. So what's the trade plan for next week? Wait, you don't have Monday's trade planned yet? Oh my God. Think about it. There's already a trade plan made. If you're a bull and you don't have this planned out for next week, you are at least 24 hours behind. Okay? I'm telling you, if you walk into a situation like, hey, what's up, fellas? What are you trading today? I will I won't say the market will destroy you. Some people are planning their trades hours in advance, days in advance, and even some cases, I'll teach you how to plan your trades weeks in advance. Are they always right? Hell no. What are you talking about? But you are strategically better off spending time planning. That's right, Jimmy. Or James, yes. Monthly support. Pivot points. J-Man, why the first day? Oh my God. Just join, dude. You have a million questions, by the way, J-Man, and I appreciate them all. But you pay the $88 and join. It's for a year, J-Man. $88 a year. Imagine you can just sit in front of a genie and ask questions all day. Genie, tell me. Imagine you're like Neo. I know jiu-jitsu. Teach me pivot points next, dozer. Okay. Plug in, dude. Change your reality. FXBootcamp.com, guys. FXBootcamp.com. But be careful. Remember, Zach said, I'm going to steal your money. I'm going to steal your $88. I'm going to be laughing. Ha 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 ha! Suckered them into their $88 purchase. Ha 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 ha! Buyer beware. I'm going to sucker your money. I'm going to steal it. Let's see. If I can get 1,000 people to pay me $88, I don't know what would that even do? Yeah, it's just funny. It's just even funny. It wouldn't make a difference. It wouldn't do anything for me. All right. There we are, still at 0.025. It's amazing how well it just, look at that. As soon as it got up there, boop. So let's see if there's any impact yet or at all. Maybe that one isn't the best one. Let's go back to what did we have open before? I think it was Aussie, wasn't it? One minute's probably too sensitive. Do you trade crypto? Sure. I went to MIT and studied cryptocurrencies at MIT. By my professor was Gary Gensler. Does anyone know who Gary Gensler is? Who's Gary Gensler? That's my professor at MIT. I studied probably, what was it, 3 or 4 months to complete the course. Gary Gensler is nominated by President Biden to chair the Securities and Exchange Commission on February 3rd, 2021. In the fall of 2020, Gensler was the professor of practice of global economics and management at MIT Sloan School. an advisor to the MIT Media Lab Digital Currency Initiative. He was my professor and now runs all of the SEC, the Securities and Exchange Commission, and is pushing to regulate cryptocurrencies. But before that, he regulated Forex. I don't know. I would not say Gary Gensler is anti-crypto. That would be wrong. I understand that point, but it would be inaccurate. So a lot of people ask me, like, Wayne, does going to an Ivy League school matter? Does going to like a school like MIT, not Ivy League, but Ivy League of engineering schools, does it matter? Well, this is the person who taught me cryptocurrencies. Ran the NFA, which regulates the Forex industry. Then he took a break, taught me Forex. Now he runs the stock market and he wants to oversee cryptocurrency. That's what you get when you go to a school like that. When I did macroeconomics at Harvard, my professor was a senior economist at the Boston Fed. He would work at the Fed during the day and then the evening drive over to Cambridge and teach my class. Is it worth going to an Ivy League school? I was in New York not long ago, a month or two ago, and I made a mistake on the reservation. Something went wrong, whatever. So I get to the Harvard Club, and it's packed. It's full. And they're like, sorry, sir, your reservation's not till tomorrow. I'm like, what are you talking about? They're like, you booked the room for tomorrow. I'm like, oh, what do I do now? They're like, hey, the Penn Club is across the street. University of Pennsylvania is an Ivy League school. So they're like, we'll give them a call. Call them. And sure enough, they walk me right across the street. Harvard's on the left side. Penn is on the right side. Now, the funny thing is left and right, meaning liberal and conservative or whatever. So we walk across from the Harvard Club to the Penn Club and I check in. And so Penn, University of Pennsylvania, that is an Ivy League school. That's Wharton School of Business, one of the best, probably second best next to the Harvard Business School. But nonetheless, what does it mean to have graduated from the University of Pennsylvania? Well, that morning, you had an opportunity to sit down with the Philly Fed president. Not watch something on TV, not read a press release, not watch a speech. Sit down with the head of the Federal Reserve Bank of Philadelphia. Imagine a room where there's, 10 people, 5 people, and you got a coffee and a donut, and you sit there and you're a foreign exchange trader. And you can ask someone who is probably voting on the FOMC interest rate decision, and you could talk to them. No cameras on, off the record. You went to the University of Pennsylvania. They went to the University of Pennsylvania, and you maybe you get some inside information. At least you get it right from the horse's mouth. And tell me about this guy. Tell me about that guy. Who's for it? Who's against it? Who's the hawk? Who's the dove? What's Jay Powell like? What are you guys going to do? What do you think is going to happen? And they tell you off the record. Because, they're really afraid that their buddies are going to get rich having inside information. That's going to worry them. I don't know, maybe. But the thing is, that's why you go to a school like an Ivy League school or a school like MIT, where the guy regulating cryptocurrency taught me cryptocurrency. I think it's amazing. And now I'm here and I'll share with you. But that's cool, right? Prior to public service, Gensler worked at Goldman Sachs. Uh-huh. And look, I didn't even know this, by the way. Look, he's a University of Penn, he's a Penn guy. Look at it. He's a University of Pennsylvania. I didn't even know that. There you go. So he probably every once in a while talks at the Penn Club in New York City. It's killer. Killer, huh? Killer. Yeah. Is it worth it? Yeah, it is worth it. Cool, right? Cool beans. Here we are watching Japanese government bond yields in real time. I bet you 2 or 3 years ago, you would never have thought to have done it. Oh, the skies are clearing up. If it's warm, maybe I'll have my chance to enjoy that 11-year-old cigar. You want to do some biddy? Sure. You're going to miss the yens, but okay. Okay, let's switch this up. Oh, yay. Let me show you. Hang on. This is what I wanted. Okay. Okay, so what are we looking at? Currently, this says risk on. What do we need to mark? Let me change this so you can see it a little better. It says America. America. Okay, this is where the market opened. And this is the current lowest low. Do you think this is useful information? Yeah, because you might want to mark those like I did. I've already marked the range. You could do something like breakout, pull back, and gone. Okay? Breakout to this level, pull back to this level, and this. Could be. We call that trapping. Ideally, you go higher than this. Higher high, higher low, higher high. As I've already taught you a million times. The other thing I would do if I were me is I would mark clusters. So again, what we're looking at now are fractals, and I taught you 3 ways to do fractals. This indicator is just doing it, and it's like training wheels, and I use this to show you what you're supposed to be doing, is you acknowledge all these levels. Now I'd acknowledge this one, okay? And then in the technique of your own, you just look at all of this now as supportive. So that you could have said, let's go to the pink, now that we're above this, you buy a dip to it, use it as support, and have it go up to the next level. If it makes a higher high, then you buy a pullback. And then if it makes a higher high, then you buy a pullback. Okay? So it's a form of isolating price action. Okay? And you can do the opposite, saying, well, what about the next levels? Well, there's something, oops, let me get rid of the drawing tool. There's something going on, there we go. There's something going on here, there's something going on here, and then there's here. So you want to try to connect some of these so that you can maybe get something like I've already drawn. Buy there, have it breach, have it pull back, boom. Okay? Now, if you think it's coming down, right? So someone here is saying that Bitcoin's going down to 19,000. Okay, great. How do we trade that? Okay. Well, what I would prefer is the lower low, lower high, lower low scenario. Okay. Lower high, lower low. So selling now is probably not your best case, but you can trade, you can sell this at resistance, wherever you decide resistance is. Okay. But if it's making higher highs, you wait. Because as a bear, you're only allowed to sell tops and lower highs. Okay. So I don't know if you're right, and you think you're right, but you're not right now. Okay. Oh, it's short term. I also do a lot of business in Bitcoin, so very often I have cash positions. So that's not really trading. But it's a great asset class. What I also use it for is an indication of risk on or risk off. So if this is going on, the stock market is likely to be rising. So we can take a look and see and correlate them. Okay, see? Look at that. You see? We're comparing apples to apples. Okay, green, 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 green. Red, 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 white, 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 white. Green, 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 green. Red, 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 white, 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 white. Green, 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 green. Green, 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 green. Robert, I'm not interested. So you're like, do they work on sex? No, I'm a macro trend trader, Robert. What I just showed you, like somebody asked, do you have to spend hours on your charts? No. You can make a decision, set up your trade a day in advance, take the trade in a matter of just a few minutes, and then walk away for 3 weeks. Does it work on seconds? To me, it's unnecessary. Okay. Okay. Right. That's just not what a macro trend trader would do. I'm not interested in seconds. Well, since I'm the chief market strategist for tradersway.com, I would probably recommend them to you, J-Man. Huh? Makes sense, right? So Aussie dollar is stuck this week, or not this week, this month here. This one's stuck. The trade plan for bulls is this. Okay? The trade plan for bears is this and this. Right now, there's only one for bulls. And of course, that's plan A and plan B. So plan A has been executed by bulls, both. I want you to listen to this. Both bulls and bears have executed their trades. If you're doing something in the middle here, right? You're doing something different. I just want you to fully understand and comprehend that. Okay? Professionals did their trades. They could have done it last week. They could have done limit orders. A bull said on last week, said, okay, at this price, buy it. And a bear last week would have said, okay, at this price, sell it. How long did that take? And then retail traders are just all over the place. Okay? Just all over the place. Just a total disaster. So on a second chart, I don't even, why do you need that? You understand? Now, inside of that, I guess so. But look, if you did it a day or two in advance, and then you threw down a limit order, you don't need a second chart because you're not even in front of your charts when you place the order. Then you say, well, Wayne, how do you handle stops and limits if you're not actually in front of your charts? Well, let's cover that. Check this out. I throw this in, and let's do a scalp. Okay, let's do a 10-10 OCO. Okay. Okay, check your happy face. I have a 10 pip. Okay, cool. So let's zoom in here. So let's do something. Let's throw down a limit order to sell right there. Cool. Now I'm in a limit order to sell. I'm not going to do anything. And it's going to put a stop and a limit. It's going to put a 10 pip stop and a 10 pip limit. Okay, so imagine you did this on a Friday, and Monday night while you were sleeping, you got your trade plan, and it has to put you in. Well, you can't just throw in an entry. You have to have a stop, potentially a limit, and you're sleeping. Boom, boom. Done. Ha, ha, ha. Ha, 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 ha. Oh, snap. Boop, boop, boop. Okay, it works the other way, though, too. Watch. You can buy it. Boom, boom. Yeah, boy. J-Man says 10 trades for 2% with a 3% drawdown. Sounds dumb to me, J-Man. But good luck. Just sounds terrible. Wow, really? So watch this. Let's go for 25 on this one. Go for 25 on this one. So if it goes up, I lose 10 pips, but then it goes up here and I make 25, clearing 15 pips profit. If it comes down, this one loses 10 pips, but then this goes to here and makes 25, so I clear 15 pips. J-Man says, yeah, it needs to be placed with the correct conditions being met. Of course. But that's just analysis. See, that's the easiest part, is what I'm trying to tell you. If you're planning something on Thursday for what you want to do on Monday, you have hours, even days, to put some logic down. So the correct position's met. Well, that's the whole point of trade planning. That's the whole point. No, I'm showing you how to use limits and stops. Okay? Which shows you, I hope that, in fact, empowers you to say, well, you can plan something over the weekend. The market opens and you say, okay, if it rises up to such and such level, I want to sell. Now, it might not happen for hours, but nonetheless, if it goes up, I want to sell. Now you're thinking in advance and you're only selling high as a bear. You're not reacting to what's happening. You are in control. So you're like, okay, if it goes up another 72 pips and hits that area, I want to sell. I'll risk 50 pips and my limit will be 150 pips. You set it up like I just did. You put in your limit order. Remember, your limit order is not going to have stops and entries. So you have to do your OCO, which is an EA. And then you go to sleep knowing that you have a trade plan that you planned in advance and can possibly execute while you're sleeping and manage your risk and your opportunity all while you're sleeping. So why do you need a second chart to sit there and fart around? Why do you have to spend hours in front of your chart? Why do I spend hours in front of my chart? Because I love it. But there's still a proper way to trade. Now, J-Man says, but what side of the market am I on? That's like, it's so ridiculously easy of a question. So just join FX Bootcamp. Okay? Just join. Whatever. Join it. That's not even like the question. I don't even care about the answer. Honestly. J-Man, you should be able to flip a coin. It wouldn't matter. The problem, J-Man, is you don't know. Or you haven't decided. That's the problem. Right? So like that's the easiest part. That's the easiest part. But it's also probably the most important. Yeah. Oops. Well, not really. Bernard says it's going up. We're still below that hourly 21 EMA I pointed out, like, gee whiz, 2 hours ago. We're still there. Basically, really, Bernard, I would say we're at the same price we were 3 hours ago, before the news even came out. So I'd argue like nothing's actually happening. Kevin says, I have to decide if I'm a bull or bear. Flip a coin. That's it. Flip a coin. Really doesn't matter. The thing is that you're consistent. So if you're a bull, you only buy double bottoms and higher lows. That's it. If you're a bear, you sell tops and lower highs. That's it. You need to be a bull. No, you don't. There's no need. You can be a bull, I can be a bear, and at the end of the year, we'll both make money. You must look at that. You must understand that concept. The mediocrity comes from being both. I hate taking trades that are less than 3-to-1. I don't even understand why you would invest if there's no reward. I don't trade options. Futures and Forex is more than enough. I used to teach binary options, but I used it to show how you would use it to hedge. That's a long time ago. I'll repeat it. I would hate to take profit that was less than 3 times my risk. So my bare minimum for a day trade would be $33.99 OCO. Thank you, Tanya. Yeah, I don't know what's going on. I haven't felt like it was too bad. Okay. I'll give you an example here. Here's my standard operating procedure. I drag on my OCO. Hang on. I guess I can kill this. Okay, there we go. There's my standard operating procedure. 33,333. I'm a 10-to-1 guy. But of course, I don't expect to hit that every time. But that's how I start. So like I said, a day trade would be a $33.99 OCO, because 99 is pretty close to like an average daily range or an average 2 range, right? Okay. Okay, since we're getting close to the end here, I want you to be aware that we're on our way to 0.26 and that the yen's can be impacted by such a change in yield. Is it going to hit? Is it going to hit my target, guys? Yes or no? So what did I do? I placed 2 trades, one long, one short. Each had stops, each had limits. And if one of the targets was hit, the other stop would be hit, losing 10 pips, but then the other one made 25 pips. Either way, I walked away with minimum acceptable performance. Not a 3-to-1 scenario, but I don't know. So just playing around, little tricks of the trade, if you will. But I realize it's way past the time, so I apologize. I took up so much time. I apologize to the FX Street moderator. But thank you, everyone, for being here. Thank you for your positive energy and making the last 3 hours fun. And hopefully it was exciting, and hopefully it was educational. I invite you to join FX Bootcamp for $88 a year. I invite you to join tradersway.com, an ethical, trustworthy foreign exchange broker that would love to earn your loyalty and respect. And for everybody here, have a wonderful weekend. And let me just say, from the bottom of my heart, peace on earth. May the pips be with you. May your profits be above average. I hope to see you again soon. Once again, thank you to FX Street. And thank you to our moderator for being the best moderator any moderator has ever seen. Cheers.